The two biggest names in streaming are facing a number of headwinds. Disney just made it through a CEO shakeup and now is battling it out with Florida Governor Ron DeSantis. Meanwhile, Netflix is looking to rein in cost and lift revenue. So which name does Wall Street think will come out on top despite it all? Yahoo Finance's Canal has all the answers for us. Allie.
Yeah, it's always interesting to see Netflix and Disney paired against each other because they are very different companies, but at the same time, they're going through this media reckoning that we've seen across the landscape when it comes to high cost and profitability issues. Now, from an analyst rating perspective, they seem to be bullish on both stocks. Disney seems to be the winner with about 80% of analysts who cover Disney giving that stock a buy rating. Netflix, on the other hand, about 50% of analysts give that stock a buy rating. And on top of that, Disney also wins out when it comes to potential upside, with analysts seeing a 26% upside for Disney with just about a 4% upside potential for Netflix. That's according to data from FactSet. But there are bull cases for both companies. If we take a look at the bull case for Netflix, that largely centers around its crackdown on password sharing, along with its recently launched ad-supported tier, which did debut in November. Those are two big revenue initiatives. And because of those efforts, we saw Bank of America earlier this week name Netflix as one of its top second quarter picks. Wells Fargo analyst Steve Keyhall also said that he expects more outperformance in the stock over the efforts surrounding the password sharing crackdown. If we take a look at where shares are trading today, they're up about 18% on the year, far outpacing the S&P 500. So that's Netflix. And if you want to switch gears and take a look at the bull case for Disney, that all centers around its diversification. It's not a company that is completely reliant on streaming. We have other components of this business that can help offset some of those streaming risks. We have the parks business, for example. That is a business that has been very resilient, especially post-COVID. We also have sports with ESPN. We have movies. So there's a lot of other things to work with here. And that's really attractive for both investors and analysts alike. So it seems like, for analysts, they're leaning more towards Disney than Netflix. And with Bob Iger at the helm, that just instills greater confidence in this stock moving forward.
Do they believe in one's profitability model versus the other? Is it clear where they're kind of honing in on margins, as many of the activist investment campaigns around Disney that have kind of circled it like a shark before kind of stepping back after Bob Iger seemingly put some of those issues to rest at the last earnings call? Is it seeming that the investment community is also picking up on that too? I
think they are picking up on that. Look, profitability for both of these companies is clearly paramount, and they've both gone on significant cost-cutting initiatives. You take a look at a company like Disney, they're in the midst of layoffs, cutting 7,000 jobs. They've restructured the business. In a similar vein with Netflix, they are leaning into those revenue initiatives to try and boost the average revenue per user. It's not all about the subscriber anymore, which is historically what we've seen from Netflix in the past. Now, analysts have said, look, Netflix is clearly the leader here. Disney is too. But again, it's that diversification that makes profitability more in reach for a company like Disney, because they have other things to work with if things go south in streaming, whereas Netflix, it's really a one-trick pony there. And that's why you've seen them trying to experiment with different things like live events, video games, workouts. My friend did a Netflix workout the other day. Yeah, she said she really liked it.
Really?
Yeah, I guess I might have to try that too.
All right.
Diversify my workout as these companies are diversifying their businesses.
I'm going to write that one down. Netflix workouts. I might have to try that.